Hello, this is a video where I'm going to discuss how I make greater than 6 figures per year on just a $20,000 investment trading 2-day till expiration credit spreads. My name is Dale Brethauer. I've been a trader for over 4 decades, hedge fund manager, and I am the head trader at www.optionsinfinity.com, which specializes in credit spreads. And we have focused on the 2-day till expiration credit spreads for a number of reasons. They are very, very profitable. You've got limited risk because we're taking advantage of the rapid theta decay. If we've got the direction correct, or even if we miss it a little bit, we're going to come out a winner. And I manage the trades if we have a loser, and we'll send out an exit alert if that is a loser, and also teach you how to do that. In this chart, I just want to show that in the last 2 days, see, options are made up of intrinsic value and extrinsic value. An out of the money option, the only value it has is time. And what we're doing with credit spreads is selling one out of the money option and buying one further out of the money for protection. With the 2-day till expiration, excuse me, we are taking advantage of this very rapid decay of theta, which is the premium that we've taken in. It rapidly decays in the last 2 days. And that's our big advantage right there. These are the last 10 trades, and the results over here are trading 20 contracts. I'll let you digest this a little bit. I've got the date that the trade was put on, how much credit we took. All these trades are on the SPX. The SPX, the next day that we put this trade on. So you see that this was May 20th, and the trade we put on was for the next day, 21 May, and this was a bull put spread. We got out of that, and I usually get out. We took $1 credit. I could have let this go all the way to expiration. About noontime, it was only worth about 5 cents debit. So we had made the lion's share of money. So why not just take that profit and get out? And I will teach you how to do that. I also, if you choose to become a member of Options Infinity, I actually will send you entry and exit alerts when I am making a trade. Let's take a look at these trades again. We started out. This was a little over a month from April 9th up until May 20th. You can see the kind of consistency we're getting in. This is based on 20 contracts. Now, some of you will not be able to do that. This is okay for small portfolio sizes as good as large portfolio sizes. It's good for beginners as well as experts. Let's say you're only going in with one contract. Well, divide this number by the 20, and that's what gives you your profit for one contract. One contract you can get in with $1,000 margin, which is something that you can get in, learn, build up your equity, and begin to move on. There's bringing in 2,000, 3,100, 17, 19, 2,200, 23, 20, and this was a loser. This was a loser. We got $1.15 worth of credit, and we got out the next day with a loser. The reason I did this is because it had, I usually watch the 3x point where we're losing about 3x of what the credit we have. And you'll see that this was about 310, not quite the 3x, but I decided to get out because I didn't see any support. So I don't want to let these go because I'm always dealing with a 10-point spread. And we want to get out because we don't want to get a big loss. See, one of the advantages in doing credit spreads, and one of the misnomers is that, yeah, you can have a high percent of winners with credit spreads, but one loser will wipe you out. Well, that's true unless you manage the trades, unless you have a disciplined exit strategy, and you're a professional. And I do have a very high class exit strategy that I incorporate. I follow these trades, and I'll teach you how to do that. I'll also do it myself if you choose to become a member. But if you summarize this chart, this was 10 trades, 9 winners, 1 loser, for a net profit of $15,000. We brought in 19.7, we had a loser. We're going to have losers. We're going to have losing streaks. And but that's all part of trading. Nobody is 100% correct. If they are, they're telling you fibs. This is extraordinary. This kind of results are extraordinary. And you can get consistent returns like this using the 2-day to expiration credit spreads that I teach. Trading 2-day to expiration credit spreads have resulted in greater than 85% win rate over the last 252 trades, and that's 3+ years. Of course, past performance is no guarantee of future results, but this is an extraordinary return, especially if the 15% losers are managed and controlled. Just take a look at the expected returns on excuse me, on this 2-day to expiration credit spread strategy. This is a formula that I was taught a long time ago. If you take the winning percent here was 86%, times the amount that you win when you win, minus the losing percent times what you lose when you lose, gives you what you can expect per trade per contract. Around $50 for 1 contract. 20 contracts, you're going to need if we're going with 10 points apart, you're going to need $1,000 per contract margin. If you've got 20 of them, you're going to need $20,000 margin. And what you're going to do is you're going to get about $50 per contract times the 20, or about $1,000 per trade. This is the average. This is taking in losses. This is taking into consideration your losses. Last year, we had 74 trades. Take $1,000 times 74, and that's very close to 6 figures. If you want to compound a little bit, that's very easy to get 6 figures from the $20,000. This is easily compounded. Of course, once again, past performance is no guarantee of future results. I've been trading and teaching this. This is how I've made my money. I've done this for 4 decades. And I have really focused on this 2-day to expiration credit spreads for the last 3+ years. I think it's extraordinary. You don't have, it's low anxiety. And I can teach you this, and I can also send you out an entry and exit alert. Trading the SPX is what I do. It maximizes your weekly income. The SPX, of course, is the 500 very large cap corporations led by NVIDIA, Microsoft, Apple, Google, the big boys. Over a third of all Standard & Poor volume is now in weeklies. It's not trading the Standard & Poor directly. It's trading weeklies, not monthly options, but weeklies, okay? A third of all the volume. So you've got an ETF you're trading that has over 500 stocks weighted heavily towards stocks like Nvidia, Google, Apple, and you've got tremendous liquidity, so it's easy to get in and out. It also has nice credit because it's a very large price. Large hedge funds and institutions use the XPX to hedge their very large portfolios, which gives us a huge advantage in liquidity. We're doing what these big boys do. Our edge, which is tremendous, is I'm going to teach you and I'm going to show you that we place our trades when they are overbought or oversold. And this is a tremendous edge because this is going to give you credit spreads that are profitable about 85 to 90% of the time using the rules that I have for getting in. That's our first edge. The second edge, where you're going to use a delta of about 0.1, which in layman's terms means that about 90% of the time, these options, and remember, we are sellers of options, will expire out of the money. We got 85% up here. We got 90% down here. We're going to manage the losers. This is just a tremendous opportunity. This is an example of the text that I send out. This is, we placed a trade on Friday, March 15th, and it says XPX weekly, alert date 3:15. I'm entering a bull put. Reason, I tell you the reason. And this is exactly what you need to put on. You can either call your broker and tell them this, or you can put it on yourself. But we're going to sell. We're going to sell to open an SPX 18 March 5080 put. And then we're going to buy to open an SPX the same month, 18 March 1570, 10 points apart put, for approximate credit of $1.55. Now that was a very nice credit. I'm usually looking at somewhere between 85 and $1 credit. This one had a huge amount of credit because it was way oversold. I always have this at the bottom. This is these texts are what I am doing. You have to look at this trade and say, hey, is this trade right for me? Do I want to modify this? Do I want to change it? That's your discretion. That's the entry. I'm going to send out an entry text. The next day, I sent out an exit trade, and this was sent at 10:30 in the morning. And then 10:30 the next day, we got out, we exited with a max profit by buying back the 18 March 5080 and selling to close the 18 March 5070 for an approximate debit of 5 cents. So our profit here was $1.50 in actually the 2 days till expiration credit. All right. Now, I release about 1 to 2 of these 2-day till expiration credit spread trades per week, and I have an 85% win rate. This is an extraordinary trading strategy for retail investors who want to build their account in a conservative manner. What I'd like you all to do is go to www.optionsinfinity.com, sign up for the workshop, and then if you choose to be a member, you can have me sending out your entry and exit alerts so you can follow along with a professional as I'm doing the trades. I hope you all enjoyed this video, and I hope to see you all in Options Infinity as we're making money every day. Bye-bye now.